Hey Dale,
Hey there.
how's your weekend?
The sun is shining and we're like in the we're 35 degrees. Pretty good.
Any more follow through on the that deal you showed me?
Yeah, no. I mean, I've been in email conversation with him, but right now I'm in the middle of funding some land deals down in Oklahoma and what have you. I don't know. I mean, it was just passing notes back and forth between the seller and the business broker and myself. And yeah, looks like a cool little business, but
But
yeah,
they
I
want
don't
too much for it.
Yeah, I don't know, for 100,000. I mean, their justification was, well, how much effort would it take to get a brand to the level that we've gotten it to? And I said, well, I can't argue with that, but I'm looking at the fact that your sales have been going down year after year, and
Yeah,
how much work is it going to get it back up as far as a return? So no, so my nephew and I kicked it around for a little while. Said, nah,
clearly understandable.
yeah.
Interesting market, huh?
Yeah, we can call it interesting. Yeah.
So heavily news,
It
ridden.
and I do not hide the fact that I'm still a swing trader. I'm not an intraday trader.
Right.
And we just don't have any week to week, no follow through.
No,
And it's
there's
really
not a lot of
frustrating.
momentum. This
No,
is the first week that I can remember, or the first 2 weeks that I can remember literally in years that we had some follow through in gold.
oh yeah, looking at gold. I was looking at gold just, yeah, actually yesterday.
Yeah, I mean, it spent 3 weeks there with all of those bottoms just resting on the 50 week and the 100 week and the 20 week that finally pierced to the upside, not last week, but the week before. And
Yeah.
then we had a $12 move last week and $107, $106 move this week. So, my feeling is that there's a reason why, why the big holders want to continue to accumulate it. And so they're not crazy about going up. But
No,
but
why? Yeah.
the
Why
fact
would
that,
you not want to accumulate at a better price? Right.
right, of course. And so when we start to see, um, one second, share.
Yeah, there you go.
When we start to see this kind of action, I mean, I think that the gold, regardless, has been pretty decent, gets pretty decent action on the war issues. I mean, here's the start of the war a year ago.
Mhm.
And we were hanging in the 1800 area, and we made a slightly lower high here at 2078 after, I want to say it was 2090 or 2089. Let me just pull that up a year. Yeah. Okay. So, yeah, 2089, 2078, and now we're 1973. But the interesting part is that for the first time in a while, we had the gold moving along with
Bitcoin.
dramatic decline in interest rates.
Oh yeah, that too. Yeah.
And that's something that we didn't have here. We did not have declining interest rates a year ago. We had the start of a tightening cycle.
Right.
And so I think that laid a little bit more heavily on the price of the gold. But now, you have essentially what looks like it might turn into a weak dollar. You have a flight to safety. Who knows what these idiots are going to do with these banks? And, that's all overnight and over the weekend kind of stuff. I
Yep.
mean, it's 10 o'clock at night in Europe. If there's news that's going to come out of there, it'll be in the next 2 or 3 hours, I would think. And then we'll have to deal with it first thing in the morning. But it's just interesting the amount of momentum that built up in this trade.
Yeah, I definitely see, as far as my momentum indicators, I definitely, even on a weekly chart, I'm seeing momentum. I'm seeing it at a place where momentum would kick in. But to the point of the accumulators, I think accumulators are going to be accumulators regardless. Take every opportunity to accumulate at the best price they can. I don't know. I mean, it seems like Bitcoin and gold were moving as that flight to safety during this banking stuff. And I'm sure there's some motive, but that goes back to what we originally said, is it's very difficult, because even could we possibly say that gold is it less the technicals and more about what's in the news cycle right now about the banks, or what's driving what? So it's really tough.
Yeah, it's, it's one of those, it's one of those that I fall back on. I don't really care what the reason is,
Right, that
as
too.
long as I'm wrong.
But that does go right. But that does go to the point of, okay, if the follow through, right? As far as getting into, if you're buying 30 days out or something like that, what's the swing trade, and is there going to be follow through on this move that we're seeing right now? I was looking at gold up to actually on GLD. I was looking at a spread with my short leg at 220 for next month.
Yeah.
Yeah. I'm trying to find the chart now, and I don't know what I did with it. I don't know what I charted it on.
Well, here's the weekly here. And what's interesting is when gold trends, and clearly looking at these bottoms in September and October of last year, essentially it's been trending. I mean, we had the big move up, and then we had this, what I would call a running correction. Same situation here, fell back right into that running correction, and then started, right back up. What I find interesting is, let me see if I can find this on this chart. Once gold is trending, I tend to look at the GDX, which has not really broken out. And when gold trends, the miners tend to outperform between 2 and 2.5 to 1. So I look at GDX, or there's a GDX Junior.
The
Yeah.
juniors at GDXJ. Yep.
And that one looks exactly the same, but it's really easy to take a look at this.
There's another film. I traded it maybe a couple of years ago, not GLD, but there's another one that's similar to GLD, but it's somebody else's. I can't remember.
Begins with an A, maybe.
Boy, that's really escaped. It's three letters. I can't, but it escapes me right now.
Okay, well, let's just figure it out.
I don't know. It may have been a low liquidity type product, right? And
Right.
yeah.
Yeah, a lot of these things are a lot of these things tend to be that way. AUM.
And that is that. Yep.
Yep, that's an iShares Gold Trust.
iShares, that's right.
But
okay.
AUM is a micro ETF.
Okay.
But,
micro
and
futures.
Say again.
Micro futures.
Let me take a look.
Or do you mean it doesn't represent 100?
Yeah, gold index. Okay, iShares Gold Trust Micro ETF, the Granite Shares Gold Trust, and Broad Physical Gold Shares ETF have outperformed 7% drop. Doesn't, okay, IAUM is BlackRock, BAR. Anyway, yeah, a lot of those micro deals tend to look very interesting right up until the time that you actually want to do something in it. It's like, it's funny because I just finished writing my comment on my charts with comments for the lumber. And I
Okay,
know it's completely unrelated, but here's the thing. Sometimes you get into these charts and they look really interesting, but the chart is so screwed up because of the extent of the move. Like, this was a 14% up week.
right,
Looks
right,
like
yeah.
nothing.
Looks relative nothing. Yeah.
It's like, or one of my favorites, the UUP.
Yep, mine just
Looks great,
expired.
except that this move from here all the way up to here is $1.
Yeah,
And so, oh yeah, this looks great. I mean, you buy a breakout here at, 26, let's say, and the move is all the way up to 27.85,
right. Yeah,
and you just, it really makes it difficult on some of these things.
my UUP expired worthless yesterday. I got tired. I've been holding it for a month and I just got tired of waiting for the move to happen. So,
Yeah.
so if
My,
you, so
my,
you might want to buy it tomorrow because that means it's going to go up next week. Now that mine have expired.
I know the feeling. We got stuck with my copper that looked, I mean, it's a huge disappointment. Fortunately for me, we had the trades in the silver, and we had that level 2 trade that I did in the S&P. But I sit here and look at this chart on the copper, and to me, I feel like I should just be going right back in and replacing it. I mean, it's a nice little flag. It's right back to the middle of this consolidation on which it ran, forgetting about the low here, although that's where we actually put it on. But just looking at it from, mid-range, 383 or so, all the way up to 435, and the close this week was 389, and the low was just over 382, 382.20. So, I look at that and I say, well, the only thing that bothers me about this,
Right.
though, is
Yeah, that caught my
I
eye.
see here,
Yeah.
and you also have, if you, take a closer look at it here, it looks like the 5 has rolled. There's no question about that.
Mhm.
The question is, what does it do when it gets down here to 394? Does it cross?
Right.
And so if that's the case, then it's, I have to start putting it aside. And,
And your blue is what? Your 20?
I was in the CPER along the 25s, short the 27s.
No, but your blue, is that a 20-day?
Oh, yes.
Okay.
Yeah. Well,
Yeah.
this is a weekly, so
You're
it's
on
a
a
20
weekly,
week,
okay.
but yes, it's a 20.
Okay, so it's kind of your mean. Okay, yeah, yep. I would agree. That's the first thing that jumped out at me was, what's going to happen on the MACD, and then will the 5 revert to 20, and then what happens there?
Right. Well,
So, tough place to take.
it's, I can watch it all I want, but clearly I'm not rushing in.
Yeah, it's a tough place to take a trade.
I think that we finished the week up about well, I know what we made on the week, but I think in my year to date, it's so funny how and I have no idea why this happens, but it's so funny that I consistently, one second, yeah, we're at 7%, 736 is what we're up. And we only have these two positions, Estee, which is an oil that sells for 2 times earnings and grows 30%. And I bought a CVS call. I'm going to add to that. But, you know, it's really kind of funny that and again, I don't know why, but I consistently have this change in my trading literally as the calendar changes. I have no idea why.
Hmm.
In the big account, which is 100,000, which includes stocks and covered rights and stuff, I'm I was 18 for 21.
Not bad at
In the
all.
wait, in the options account, I'm 15 for 20. And but I mean, at the end of the year, I think last year, I finished the year 40 for 72. So I mean, you know, I don't know what it is that gets to me, but every year as the calendar changes, that's what happens to me,
Hmm.
which is okay.
Averages out, huh?
Yeah, I guess. That's funny. The guy who originally did all the marketing and set up the blogs and the Instagram and everything else, he called me one day, not I guess maybe 2 or 3 years ago, and said, okay, you've been profitable for 16 out of 16 of your last trades. It's time for me to fade you.
Yeah, right, exactly.
And I wasn't even really looking at it, but nonetheless. Anyway, Greg, any questions? Greg may not be listening. He may be muted. Okay, so want to take a look around the markets here?
Yeah. What do you, I literally, I mentioned this to another group. I have literally not run any equity scan, any of my scans yet this year. It's been so tough taking a position and I was beginning to feel very ineffective
Yeah,
in spotting moves. So I haven't really run any scans. So right now going into after yesterday, after the monthly OPEX, I'm extremely light. I'm only holding, you know, a handful of SPY butterflies, you know, put flies. I have
right.
no trades on whatsoever right now.
So here's the S&P, which frankly, one sec, Greg, to everyone, thanks. Okay. Okay, Greg. I'm kind of betwixt and between here. I mean, fundamentally, there's so much stuff that's wrong that, you know, I almost have to ignore it. I added this uptrend line literally this morning. And the reason that I added it was twofold. First of all, when I first opened the charts and looked at it, it looked to me like that uptrend line was going to run into this 200-week MA. And in point of fact, once I drew it, it was just dead on it. The problem here for me, I also drew this downtrend line, which we moved above. And by the way, even with the market being down, this actually closed up. Not only up, but up on the week and 3/4 up or 2/3 up on the range. So this chart has been remarkable as far as being coincident to a lot of these moving averages, and especially the fib retracements. I mean, this 38.2 runs right through
Now,
everything that has happened in almost a year. And the 23.6, I know that's your least favorite, but it too runs into the top end of that range, going all the way back to January,
mhm.
late January of last year. And this 4,200 level has been what I've keyed off of over and over and over again. And we've had such massive reversals out of it that it's really hard to ignore. On the other hand, we've had this 1 month where we would not close below that 200-week MA. And so that's kind of what I'm looking for. I'm kind of looking for that general area in this. As you can see very clearly, the 5, the 50, and the 20 have all rolled, and it looks like tomorrow or Tuesday. Well, this is a weekly, so probably by Tuesday afternoon, if we don't get a bounce back to the upside, we're going to roll to the downside. My question is, are we going to stop at 3,800? Are we going to stop at, 3,700? Or are we going to test all of these closes in this 36 to 36.65 area? And frankly, I don't have a clue, except looking at the MACD, looks like it's about to roll to the downside. If I look at, let's see, second, stop sharing. Screen share. Can you see my chart?
No,
Okay. Let's try this again. Zoom. Screen share. There we go. How about now?
now we got it.
Okay, so this is the SPYs, which are interesting to me as a trade. However, they're not terribly interesting to me as far as what I actually look at to key off of. That is this, which is the cash. And this I just live by. And frankly, it's overbought. The MACD is rolling, and the question is, does it, bounce off, or does it go through? And if it does go through, here's the lower Bollinger Band.
Mhm.
But that comes through at about 38, let's call it 3,800. And last week's low was 3,808. So, I'm watching this. This red line that runs through this, that is the 75-day linear regression of price. So that's just the mean.
Mhm.
But this other one is the 200-week MA, and it runs directly into that number, 3,800, 3,810. So, this is, I'm probably not making a trade in the S&P, or even one of those level 2 trades, just because I think it favors the downside. And frankly, having just come down from 4,200, and seeing all of these highs back here and lows back here, I just don't know what's in the trade.
Right.
Now, while it's true that 3808 is 108 points away, I no longer consider that to be an issue
Yeah, and what,
because we could do
SPX?
it in a day. We can certainly do it in 2 days.
Absolutely. That's the SPX, right?
Yes,
Yeah, so SPX, weekly expected move is 121.23, and absolutely we could see that in a day. And that's kind of the issue with this volatility. When you got an IV is 29. Yeah, it's very plausible.
Yep.
Now, if you want volatility, I think I posted, if you want to play volatility, that would be the KRE this week at an IV of 118, 118 and
Yeah.
0.48. If you want to trade with volatility.
Yeah, and frankly, that one is getting into support down here at, I don't know what that number is. Let's see. Um, 38 or so, and it was there last week. So I'm gonna have to look a little lower.
Yeah, for me, I'm looking at two price levels on KRE that I'll be paying attention to. That's the 40 strike and the 30 strike.
Yeah. And what's interesting, and the only reason that I find it interesting is that I listen to CNBC all day. And what interested me, not last week, but the week before, was Mike Coe in San Francisco.
The options action guy.
Talking about these guys who were putting on call spreads on the VIX long the 30s, short the 50s. 50s.
Yeah, I will admit I had some spreads similar to that a few months ago. Because I figured black, if something were to happen, obviously a cheap spread far out of the money. It's a lotto ticket.
Right.
Clearly they didn't do anything. So yeah, but yeah, they didn't work for me.
And which one do you trade when you do trade that, Dale?
Just the VIX?
Yeah.
Yeah, it doesn't do options on the.
Because I've done it twice using I want to say maybe the VXX.
Or okay.
And bought the calls.
Yeah. I use
and frankly, I've lost money on it every time I've traded it.
Yeah.
And I've absolutely caught big moves to the downside. And they just did not perform to me. And I swore off them. But it seems like, like I should be able to follow them and see, let's see if this VIX, yeah. This is the futures, midterm futures ETF.
Right.
What I want. But this one has just crushed me twice. And, here we had a 43 low and a 57 high. And we had almost the same exact kind of move that I was trying to play, where they never performed and in fact were 100% loss.
Yeah. Let's see.
I mean, so how do you play this?
Yeah, so well, let me see. I gotta log in to Tasty trade, but yeah, mine is just it's just the VIX symbol. Must be the same as what you have there, 30-day futures. But the trade I took was, I don't even remember what month that was. I mean, I think it was this year, but it was a spread similar to that, with my short leg being at around 50, just kind of, it was a very wide spread. Just kind of like if something were to, I don't remember what the event was that I was trading it around, but point is we've had very, very little movement in the VIX, and for all practical purposes, as I see it, you can't trade the 9-day VIX.
Okay,
And the 30-day is pretty much useless.
right. And
because-
probably expensive.
Well, yeah, again, like I said, I was so far out of the money, they were cheap, but with the zero DTE stuff going on, what good is the 30-day futures on it when
Right.
so much expires at the end of the week or intraday? So I don't know. It's tough.
Yeah, I think I'm just gonna let that slide from now on. I
Yeah.
mean, there's so much else to do. It just doesn't make a lot of sense to me to be working on something that, I haven't figured out. I mean,
No,
I was very simplistic about it. I saw the market going down and we did nothing.
right.
I
mean-
think it was back here in December was the last one. And we did move down and the VIX moved up one day.
Hmm.
And then after that, it just faded to nothing without a lot of stock action. I mean, with not a lot of index action. And it was just a huge waste.
Yeah. Yeah, and Greg, I'll show you my KRE. I already posted it in the room, but we can talk about the KRE chart and the pitchfork,
Okay.
what you're seeing there. But
Oh, yeah, I wanted to ask you something about
Mhm.
that. Where does the pitchfork, where does the pitchfork get anchored on some of
oh
these things?
yeah,
I had no idea, like SP.
it's really no, I mean, there's no hard and fast rule, and to me it's very similar to Fibonacci in the fact that you gotta identify your swing. What low are you gonna pick, and so what are you gonna anchor to? And in many cases on many of my charts, I anchor to the 2009 low. If I'm doing a very big picture, kind of
Right.
2009 low, and I've been using the 2018 high-low swing. And anchor, so 2009 low is my anchor, and then the swing I'm using for my standard deviations, would be the 2018 high-low swing. And kind of like I posted in the room, the
Okay,
COVID
so-
low was perfect 3 standard deviation.
Okay, so this gives me. I don't see it here.
Yeah, so
It
it's
must be
Andrew's
on one of my
no,
other-
it's Andrew's pitchfork. Andrew,
Got it.
there you go.
Okay, so I take that.
Yep.
And I anchor it here.
Anchor, and then find a high-low swing that you want to use as your base. And for me, the first time we really saw any that kind of volatility was in 2018. So then you anchor from the high to the low. So right now you're not at your low. See, so your fork should be, the lower part of the fork should be on that 2018 low.
Okay. Okay, yeah, I anchored it
So
to the
there-
top of the. move.
Yep, so there's the top, and then take the other one. Nope, so you had it right. So anchor that part. Or do it that way. Yep. There you go.
Oh, okay, I see.
Yep, so
Okay, so that's just a mid-range.
that's the mid range. So right now you're in what? Yeah, so right now we're kind of hanging around mid range.
Yeah.
So over and over and chart after chart, even going back to the COVID crash, when I was playing with Andrew's pitchfork, I said, wow, that was just crazy a crazy move. And I use TradingView for my pitchfork a lot because I just like to keep a clean chart with that. And then I said it was clearly not a 1 standard deviation. It wasn't even a 2 standard deviation, but just out of curiosity, I threw on a 3 standard deviation,
Right,
nailed it perfectly. So that was a 3 standard deviation move based on that pitchfork. We're doing the exact same thing on KRE right now.
right.
Now, what's the predictive value of that? I don't know. But when I see that's where it stopped during the COVID low.
Yeah,
I mean, I say, okay, that gives me a point, a reference point. There's no guarantee, but when it does it, so when it moves so perfectly within those standard deviations, I kind of can't ignore it.
yeah. This is the trade that I put on yesterday. CVS. Now, you have to understand that I own CVS at essentially 52. I own it in the big account, and it's also on my list of stocks for total return in the weekly letter. And so I sold some of it in this area. I sold it at 102 and change. I don't know whether it was here or there or there. But looking at it on the weekly basis, and I think, it, from my perspective, I consider it an interesting place to hide in this market because of many reasons. But fundamentally, it makes incredible sense to me. And this falls back, and it's probably a fault of mine. And that is, I've always been a chartist, but when I was a broker, I had to have a fundamental story in order to be able to pitch something to someone, instead of saying, somebody who's putting retirement money in it. And I'm saying, you don't say to them, oh, well, it's on the lower Bollinger Band and blah, blah, blah.
Right.
Blah. Okay.
Nope.
But CVS is number one everywhere. Number two owns Aetna. Number three has the Minute Clinics. And number four is bringing on primary care physicians. So I don't see any difference between CVS and, let's say, United Health or any of the others from the fundamental side.
Which one is having outs right now with California?
Walgreens.
Okay.
Which is actually, up until the last week or so, the cheaper of the two. But they have, as you say, problems with California.
Yeah.
And I don't think that those are easily solvable problems. And, basically for a lot of reasons, and I used to live in San Francisco, I am, now, even if I could afford to go back and live the way I was living before, which, basically costs about 3 times what it did when I was last there, I still don't think I'd go. I mean, some of the things that they're doing out there are just absurd. And without it sounding racist, did you see the news about the $5 million reparations?
No, but yeah, it doesn't surprise me if that conversation is happening out there, if that's the case.
There are 5 million African American residents in California. I mean, San Francisco, you have to figure, is kind of small. When I lived out there, it was just a shade over 500,000.
Yeah,
in the city, but they're talking about $5 million, and they're saying that the pool contains 5 million people who will have to meet certain um, eligibility requirements. And then I think about all of the other stuff that's going on out there, and I just say, oh my God, I mean, it's absurd between city, state, and federal taxes. It's ridiculous on its face for the no cars sold that are gasoline after
35,
2030. Yeah,
30 or 35, yeah.
yeah. Regardless, doesn't really matter.
No,
That's not going to work because they don't have a grid
no,
that could support it.
no.
And so, I'm a little iffy there, but this CVS, I mean, how often does it decline like this and then not bounce off? And we spent last week, the week before last, through it. And then this week through it also with the close. And I think I bought the, let's see, what did I buy? I bought the 77 and a halves, which would be pretty basically last week's high. I only bought 2 and 1 because I had full intentions of adding another, probably 5 or 6 and 3 in either direction. Don't really even care. But when I look and I see, I don't see very many places where we were that oversold or the MACD was spread that wide from under, except maybe about here, at which point we saw one more week of decline and then a move from 88 to 107. So, this is just one that, and I don't even remember why, but it showed up on a chart that I had been using before, time segmented volume with a moving average. And that's stretched pretty much to the extent that it has been stretched, same exact spot, 88 to 107 in, 7 weeks or so.
Yeah, yeah. I'm looking at it right now on my chart and I'm seeing that it's definitely down there where it's reverted
Yeah,
before. I'm not getting a clear indicator as far as, this is the turn to buy. However, it could be a situation. It looks like it's building on the volume profile. It looks like it's building some volume at around the 75, 17. I am getting a signal. What we got earnings coming up when? That's not till May. It's building volume down here. That's for sure.
yeah, that absolutely is for sure. I mean, this system gives me volume 1 day daily, and this is a 90-day. So we're trading 16.8 on a stock that generally trades 7.8 million a day. The 90-day average is 7.8 million. We traded 16.8 here, basically same stuff. I mean, I look at these numbers and, they're huge. Volume last week, 46.8. Volume the week before, 45.4. I mean, these are pretty big numbers. And as we are moving away from the trend, I don't care whether it's new people coming in or longs selling out. Either way, it just shows that there's some massive interest in it on either side. And frankly, I could care less which it is. I mean, I'll know pretty soon and we'll have to see.
Yeah. I definitely see it on the volume profile. That's for sure.
Oh, yeah. What does it look like on your
Oh, on TrendSpider?
Yeah,
Hold on here. You mean as far as the candle?
well,
Or let's just pull it
candle,
up.
and there's
Looking at
something else that you used
CVS.
on TrendSpider that
Yep.
I've
So I'll go to
I've
weekly
always liked seeing.
raindrops. Is it the volume profiles?
You know what it is? It's the anchored VWAP.
Oh, the anchored VWAP. Yeah. Okay. Well, let's see here. It looks like if I anchor, it looks like we had a series of lows at around 52.67. So, oh, you want me to do it? Okay, hold on here. You want me to screen share?
Sure, let me get out of this.
Oh, you gotta enable me.
Oh, I didn't know you were disabled.
I am disabled, Cam,
Yeah. Okay.
in many ways.
Uh, Chat, pause, reactions, live on YouTube.
You might have to go to like me in the find me and enable me.
Allowed to pin chat video. Huh. Whiteboards.
If you go next to my
Got
name
it.
and you see, okay,
That should do it.
there we go. I gotta move that toolbar out of the way. TrendSpider. You guys see it all right?
Yep.
Okay. Move this thing out of the way. So let's see. I mean, it looks like I got right here, this would be my anchor point. I mean, we got a pretty consistent low down here. So
Right.
let's do that. I'm on a weekly chart right now. So I'm going to switch over to a daily just so we have a more. Then just drag that over. Drag it over. Gotta find my low. I should be able to anchor there. And I don't know what that is. October of 2020. Okay. So, and that's the thing I like about, and I know we talked in the chat, there was somebody else talking about their experimenting with VWAPs and what have you. To me, TrendSpider is real. I mean, that's one of the things I liked about it, that they kind of made anchoring a VWAP very easy. I go right to that candle, click on it. Oop. Candle, click on it, anchor a VWAP. Boom, I got a VWAP. You can see tagged it nicely there. Been kind of hanging out around there. I mean, where am I at? CVS, yeah, way below. So with the idea of, especially an institutional, why would you see volume, or why, like here, you can see this volume shelf starting to collect down here. I mean, because especially if you got orders to fill and you're able to do it below VWAP, right? You're already in a good position. So what I've been doing lately is I've also been putting a VWAP on the upper. Yeah.
So if it turns up from here, the first volume, it looks like comes in around 81 or 82 as resistance.
Oh, right here. Yeah.
Yes.
Yeah.
Okay. And then if it continues, it clearly has a huge issue at 87.
Yeah, I would have to.
Which is where you initially anchored it, right? On the downside?
Oh, you mean 57?
No, I'm looking up here. where this,
Oh, you mean here?
right.
Oh, that was 110.
Yeah, no, I'm looking where this POC,
Oh, so that's this right here. That's my volume profile and I can drag that to whatever. So that just defaulted there.
okay,
So if we go to, and sometimes what I've been doing is I've been, especially with the 200-day,
right,
is when's the last time that's this right here? Because if we go with the idea that you just basic, buy above the 200, sell below the 200.
right,
I've been saying, okay, what has volume done since the last time it crossed the 200? Throw a volume profile there. Now that tells me my point of control going back to April 9th of 2001. This is where most of the volume traded. You can see that in the volume profile
Right.
as well. So that gives us that 80, 85, 84.
Yep.
Yeah. But that's where,
That's where it has to have, that's where it would have a problem. But
yes.
also, it looks like it would start to have a problem around 80, 82.
If
I would care less about that if it gets there.
right, if that's where people that, if volume that's holding here at that point says, oh, whew, I'm making right, I'm back to break even, I'm out,
Right,
then it becomes a problem. Or does it say that because that was where all the volume traded, is that going to be a gravity point? It's gonna, now we're going to start to see a movement back to that, kind of like we did on Friday with the VWAP. And when I posted saying it looks like it's going to want to go back to VWAP, and it kind of closed right at it, right? I mean, that point
Right.
of control becomes a gravity point. So yeah. And then as far as I'll just do it on a weekly just to see how the week did with and it's got raindrops on it now. So right now, raindrops not telling me anything on this one. I mean, it's all the volume 10, it was at the low,
right.
right? That for the second half of the day, it was down there.
I want to show you an interesting chart when you're done with this.
Yeah, let me just show you. I'm going to do this real quick. We talked about gold. This is what I was looking at on gold.
Yeah,
Is GLD. So this is the pitchfork again. And why I was looking at the 220. So let's go gold. I'm going to take everything off, remove all my studies, get that out of the way. Remove all studies. Yes. I got to keep moving all these pictures out of the way. Let's go to a weekly. $15 years. And there's that pitchfork. And that pitchfork goes back to
right,
whenever. And you can see right here, it tagged it right here. So I use this high-low
right,
or the deviations, tag the mean perfectly right here on August 10th of 20. We came right here, tagged that perfectly. Are we moving back up to the mean? So I ran a fib off of this swing. That takes me to 161, basically. Not timing it, but that gives me a level, right? Why, I got a 161 extension and we got the midpoint of this. So that 220 looked interesting to me.
yeah. And that, and I could easily see it there. Okay, I want to show you something. Where is it? That's not it.
So Greg, those VWAPs were what? What were you running VWAPs on? So on CVS, okay.
This is the weekly point and figure on CVS.
Mm-hmm.
So, it clearly was topping out at 104.
Yeah.
I only got 102 and change. But look at where we've stopped. We've stopped at the triple top breakout, which is all the way back in 21 at, I take that back, all the way back in April of 2021, so 2 years ago. And that's exactly where it stopped. It stopped at the point of the breakout at 74, which I find somewhat interesting. And I want to see one more on the sharp chart, because this is something I've started to look at recently. And update. This is an equivolume chart. Are you familiar with this at all, Dale?
No, huh?
Okay, so what you want to see on this are these bigger blocks. A rectangle is the best way. And what that signifies is a narrow range with a lot of volume. So the block extends side to side or horizontally on more volume and contracts top to bottom on a shorter range. And so you see all of these, little rectangles and the ease of movement, obviously, to the downside. And then we come back up and all of a sudden, you see a little bit wider block with a little bit shorter volume, and we come back down. And then this on Friday, I guess this is because it's a daily, we had our first wider block. And when you look at it, it's relative. This block is twice the size of anything that we saw side to side in the last couple of days. And on the weekly, not as pronounced, but it's just an interesting way to look at some of this stuff, because things that block out become very obvious. I know that this one, this was pretty easy ease of movement. And then as it made the lows, the blocks were consistently wider. I mean, you look at these and this was a little wider and this was 150% of that, and it held and it held and it held. And of course, it turned back to the upside. Not crazy about this area in here the last 3 weeks or last 4 weeks, or 3 of the last 4 weeks, where it looks like it's blocking out again. This blocking out can take place absolutely any place. You rarely see this.
Yeah, that's a.
But you do sometimes see this. And here's where we went. This is an unusual one because.
Oh, that's a biotech. Okay.
Well, no, it's better than a biotech. It's a takeover.
Oh, okay.
It was, I came in, it's funny. I don't know if I mentioned it. I think I might have mentioned it in the room a couple of times. I have a subscriber in Australia. And in Australia, they can't trade our options.
Right.
And so what they have is, I can't remember exactly what they're called, but this guy explained it to me, where rather than having a strike, you can buy this paper, and the paper is priced at the current market, and you buy the time frame. So
Hmm.
even though it's two-dimensional, you don't get to choose. You just get up or down from where you put it on. And this guy,
Oh, so it's like a binary.
yes, exactly. And or before options in 74 became standardized, there was a guy in New York where I grew up who I used to look at his ads every Sunday in the Times. The guy's name was Saul Lerner, Lerner and Company. And he actually lived less than a mile from me and had a daughter who I graduated with.
Hmm.
Anyway, he advertised what they would call down and outs and up and ins. And that's how they were priced. They were priced the same way as these things are priced. And so, you know, they were very binary. And even though they didn't, they're called CFDs, cash forward something or other. So the strike is the same, and and you're only actually choosing the time. And he called me, and he was, I think he's a doctor, and he was heavily involved with this prevention buyout. And he said, you know, you can look, I'm not telling you anything that you can't find, but you ought to take a look. And I think that they're going to get an approval going forward. And so I said, okay. And I looked at them, and they were interesting. And so he was curious what I thought would be the best way for him to hedge out his position. And I told him, well, you know, are you seeing my chart?
Yep.
Okay. So what I did with him was I told him that I thought if it were me, and he had more flexibility, but I set up a trade for me, which was long. And this is about when it was back here. And what happened is I set up a long, the tens, short, the 7.5s, because those were the only two strikes that were relevant. They didn't have an 8 and an 8.5 and a 9, or even an 8, a 9, and a 10. And so what I did was I bought both sides.
Yeah.
And in fact, you know, the stock had been as high as 1065. And what I did was, I think it was right here, yeah, but 1088. And I think that what I did was, the news came out, this is where it was exactly. And it had just been 9 3/4. And so I said, you know, you don't know when it is, but there's only, and this was back here in November, and there was a week left on those options. And the news came, and he was absolutely right, and the stock went the other way.
Hmm.
And I don't think I had paid $1 for both sides, because they were both $1.50 out of the money on an $8 stock. And so I made money, because what I did was, first I sold the 7.5s for $1.25, got all my money out. And then 2 days later, beginning of the week of expiration, the stock had moved up, but, you know, clearly nowhere approaching being in the money on the tens. And I think I sold them for 20 or 30 cents. Anyway, so, we went kind of dormant in here, and I bought the stock and I added to it here at 970. I think I had 800 shares with an average price of about $8. And I woke up last Monday morning I sold mine at the open at 2407, the common. I didn't even play the options again. I just accumulated, 200-300 shares at a time. And this is where we went.
Yeah.
But you see that I'm only using this as an example. You see this because, and that was why that huge sideways block was there.
Right.
Volume was 3.1 million when its average daily was 204,000. And it had at best a limited range. And since then it's had, no range, 25 cents, 24 cents. I mean, and it's, it's a $25 all cash deal. But so I've gotten into looking at those equivolume charts because sometimes it just is so obvious. I mean, if you didn't know there was a deal here, there'd be no way you could own this stock.
Right.
I mean, absurd, but I don't have to own it anymore.
No.
Anyway, all right. Greg, if you're still there and you would like me to show you anything, or Dale and I to opine on anything that interests you, let me know. Otherwise, I am going to walk my dog before it gets dark.
I just do have one question. What, I think we've talked about this before. What symbol would you use for lumber? As a lumber trade?
Okay, let me just.
Is it the forestry? Is it the tree management companies? I mean, there's really nothing that represents.
Okay, I play it. I'm long RYN.
So Reynolds or whatever,
No,
or Rayonier or something.
Rayonier.
Yeah.
Yeah, and the reason that I own it is because all of these lumber companies have, and Rayonier, I want to say I own right around here. But I've gotten 2 years worth of dividends that I don't actually represent in my statistical analysis of gains. I don't add any dividends, even though, there are stocks that are paying me 5 and 6 and 7%. Like, I don't add the dividends that I got in Starbulk just because. I mean, it's just too much work. The other one, Weyerhaeuser.
Oh yeah, WYA.
Just
WY. Yeah.
Same kind of thing. But it wasn't that long ago that these companies all reorganized as REITs. And that's really important from my perspective, because it means that they have to pass through 85% minimum of the earnings. So when I see a chart when I see a chart that looks like the lumber does, and trades as thinly as the lumber does, I mean, this is just impossible to play. I mean, unless you're only playing for the top or the bottom. And clearly that's the kind of chart that this has been. I mean, all you have are, this is a weekly, so it doesn't really show it. But on the daily, you can see that there have been times where, you know, you couldn't get in or out of this. These little dots and stuff in here, those are limit up openings with no trading, literally. And so,
On a futures product.
right.
Yeah, okay.
And the only way that I found that this was worth trading was to take the opportunity to get long on a limit down, limit up on the reaction, or to get short on the limit up to limit down move to the downside. And frankly, there was plenty of that. I mean, let me see if I can pull this over. Yeah. Here's a limit up to limit down, followed by limit down, locked limit down 1, 2, 3 days in a row. And remember that this is an expanded limit, because after the second day, they expand the limit by 50%. And then it goes back to support and goes limit down, limit up, and goes limit up 1, 2, 3, 4, 5, 6, 7 days. And in 7 days, it goes from 983 to 1300. And so, you know, while I want to watch it because the housing industry is so reliant on it. I mean, you know, you look at who the people are in the industry, and everybody has their niche. So, you know, you say, okay, well, this isn't going to matter at all to Toll Brothers, for example,
No.
because Toll Brothers is at the upper end of the builders. And so Toll Brothers is a move up. And they were talking about the fact that when lumber was up in this general area, it was adding $40,000 or $50,000 to the price of a house. Now, when you're Toll Brothers and you're building $800,000 houses, that just doesn't matter. But if you're Lennar or Horton, who are, I'm not sure whether that's accurate talking Horton, but I know that it's accurate with Lennar. They build the starters. They build the, you know, what 2 years ago used to be 185 to 200,000. And when you add $30,000 or $40,000 to that, that's deadly.
Yeah.
And so I have to watch it, but frankly, I would never trade it.
Yeah.
I mean, even on the big days, the volume is light.
I'm going to imagine that the larger home builders like the Hortons and the Lennars and what have you treat lumber the same way we did fuel futures in the airlines, where you'd have a trading desk and they're hedging. I mean, so they're actively trading these things. But the reason it's interesting to me is because for all the regional builders and smaller builders, and if we do see tightening credit at the regional banks, I mean, it's the regional banks and it's the community banks. I was looking at a few bank portfolios this morning, how much construction delinquency they have on their books right now. And if we see continued credit tightening for community and regional banks, I think that's probably gonna hurt the lumber industry.
Oh, yeah.
And I'm just looking at, I don't know how sensitive Rayonier and Weyerhaeuser are to lumber prices, because paper, I'm sure, is a factor in there
Right.
as well. So I don't know if there's a direct correlation to lumber prices and their share prices, or,
Well, it's a combination. You obviously watch, you watch the lumber and you see all that information that comes out to us um, every single day on mortgage rates. The housing starts numbers and the housing starts and building permits were both higher this week.
yeah,
And that just reflects a minor change, because I have a subscriber in the mortgage business who, you know, 3 months ago was telling me that, he was going to start laying people off,
mhm.
and he really didn't want to. And basically I said to him, give it a couple of more weeks. And of course, we've come down so dramatically.
Yeah, so it was that was another conversation I was in earlier this morning, that somebody brought up housing starts, and I said, well, yes, but then so that's a lagging indicator, right? We got what the housing starts. I don't know if that's going to translate into completions,
No,
and then that's a lagging data, and we're looking forward at potential of tightening of credit. So will we have incomplete construction sitting out there, more
right.
incomplete construction out there in the future? So it
And
is kind of a
and
conundrum.
besides that, one of the numbers that I watch when I look at these people who basically manufacture homes,
Hmm.
the cancellations have been
Yeah,
massive.
yeah, that too.
I mean, you talk about some of these companies that say, oh yeah, cancellations are up 21%. I mean, that's an incredible number. But
Yeah,
of course, these guys really cleaned themselves up after 2008, vis-a-vis how much property they're willing to purchase and hold on their books. 20 years ago, that wasn't an issue. There's only so much property, they're not making any more of it, etc.
mhm,
All of those real estate quips for, I mean, I never heard a real estate agent who didn't say, oh yeah, this is the perfect time to.
right, right.
It's the same thing with the teleprompter readers on CNBC, who make excuses for why the market's down because, oh yeah, if you look at a 5-year or a 10-year or a 20-year or, whatever, the market's always going up.
Yeah, what
And
was
yes, I get that, unless you happen to be the guy who, was buying something at its, unless you're the guy who bought Tilray, at 300 when it was so exciting.
right?
And, it's $4 now.
What was famous line from the real estate agent down in Florida in The Big Short? Did she call it just like a little bump, or it's a little?
Yeah,
Yeah, I can't remember what she said. Say, don't worry, it's just a little bump.
yeah,
But yeah,
exactly.
so I don't know. I'll be doing the scans. I'll be looking for some trades next week. I might just, depending on how we play, I might be looking at just some intra-week SPX trades, just playing the expected move.
Yeah,
So, but when is FOMC is what, Wednesday or Thursday?
Wednesday.
Wednesday. Yep. So I'm not probably going to be doing much
Yeah.
before that.
I mean, if it gets excessive one way or the other, I may take a
Yeah,
small
that's
position,
true.
but I'm basically, I don't know, if Greg knows what the level 2 trades are, but the level 2 trades are basically trades that I will make sitting here in front of my screen. If you're not sitting in front of a screen, it's too much risk. Even,
Yeah.
I mean, last Friday, I bought 1 and 2 S&P calls going into the close on Friday, thinking something positive would happen over the weekend. And unfortunately, I was right. But by the time we were open on Monday, it was gone.
It evaporated. Yep. And
Right.
that's what I mean. No follow through.
Right. And in fact, what I did was, I think I made I think I paid 2.25 for them, and I think I got 267 or something for them just to get out. And of course, the next day they were worthless. And then yesterday, last week, when I had that level 2 trade in the 2-day to expiration SPY 392s, I bought them when it was 388 because I was looking at the S&P as 3860 as my perfect spot. And when it stopped going down at 3868, I just said, okay. And it turned out to be a day trade for 346%, but I didn't follow in with anything after that, with the exception of the CVS trade. So, all right, I will post this when it is done, doing whatever they do with it.
Mm.
And thanks for the help, Dale. And
Oh, absolutely. Yeah, we'll do
you
it
know,
again soon.
okay.
Have a good